What's up traders, welcome to Failure to Displace, and in this video we are going to take a step-by-step walkthrough of my new favourite entry model. This is a breakdown of this morning's London session on EURUSD where we were able to grab 3.7R in a stress-free trade straight to take profit. I highly recommend watching this one right the way through. There's some really good insights, and honestly if you start implementing this model I'm sure you're going to see some massive success. Let's jump into the analysis now and go through the breakdown. Before we jump into the main analysis, I've gone ahead and created a small checklist. This is just to try and help me clarify exactly what I'm looking for. So first of all, we're going to start off by looking for 1 hour or 15 minute sweeps of liquidity. So we're going to be on our charts looking for these levels, using essentially the session liquidity tracker indicator that I always use. As extra confluence, an optional extra is if we have these liquidity sweeps happening into a high time frame inefficiency, so such as a sweep of session liquidity into a 1 hour or 15 minute fair value gap, inversion fair value gap or volume imbalance, and we'll also take into consideration higher time frame optimal trade entry levels. So we're going to be looking at the larger ranges just to see if these fair value gaps and sweeps of liquidity are going to be somewhere around optimal trade entry. Once we do get these sweeps of liquidity, we're going to drop into the 1 minute chart, and then we're going to be looking for a change in the state of delivery. Once we have these sweeps of liquidity in place, we're going to start looking for a change of state in delivery. So we're going to drop to the 1 minute time frame, and we're going to be looking for PD arrays to start failing. So this would be in the case of bearish fair value gaps failing or bearish order blocks failing, potentially flipping to support in the form of inversion fair value gaps and order blocks turning into breaker blocks. Once we're identifying the change in the state of delivery, we're going to be looking for displacement, creating supporting PD arrays. So if we've got bearish fair value gaps failing, we're going to be looking for bullish fair value gaps to be created in bullish displacement. We're going to mark out our failed PD arrays. So this is marking out breaker blocks and inversion fair value gaps. And we're going to be looking to see if our supporting PD arrays are creating balanced price ranges with our failed PD arrays. We're going to be anticipating an entry at the open of a 15 minute candle. So we're going to be waiting for the 15 minutes to be opening, and we're going to be hoping for a tap of one of our failed PD arrays in the form of the breaker block, inversion fair value gap or balanced price range. The entry is going to have to be within 3 minutes either side of a 15 minute candle open. And then for trade managing, TP1 is going to be low hanging fruit, so anything above a 1-to-1 RR. Our stop loss is just going to be at a sensible level below a swing point or a PD array, and we're not going to adjust the stop loss. We're just going to take multiple take profits but leave the stop loss as is throughout the entire trade. Let's jump into the charts now and look for this in action. As always, we're going to start off our analysis on the 15 minute time frame. We're going to be using our session liquidity tracker indicator for TradingView, showing us these extended green lines where we have untapped levels of session liquidity. When liquidity is swept, as we can see here between the Asia low and the New York PM session low, these lines turn red to show us we've taken that liquidity. So just prior to our London session starting at 1 AM, you can see we've just swept lots of liquidity here, relative equal lows created between New York PM session yesterday and the Asia session, and we have swept this liquidity into a 15 minute fair value gap. So this is a really key confluence. If you are sweeping liquidity into an inefficiency, there is always the chance of a really strong reaction. We've just swept that liquidity, so we can now be on the lookout for a potential reversal targeting the Asia high. We've got this 15 minute inefficiency here, so we've got equal highs coming up into an inefficiency on the 15 minute. Let's get that correct. We're going to drop straight onto the 1 minute time frame now because we've already swept liquidity, and we're going to be looking for our entry model. So our London session starts at 1 AM. So I like to be at the screen at 1 AM to monitor price action because this is the open of a brand new 4-hour candle. So we can often see an injection of volume at 1 AM. So although officially the Forex kill zone by ICT doesn't start while 2 AM, it's often worthwhile getting to the screen at 1 AM because within this hour there may be a setup occur. So we're now on the 1 minute time frame. You can see we're coming into that 15 minute fair value gap, and straight away our eyes should be drawn to these relative equal highs here in this fair value gap. So we've been building liquidity in this area. So this is a really nice low hanging fruit target because we've got a load of relative equal highs here. So if we could get some kind of entry down here in the London session, we've got a nice easy target there. And then obviously the expectation, if we have failed to displace below the Asia range, so we take the Asia range and then pull back in again, ultimately we would expect the Asia high to get taken where we have these relative equal highs into that higher 15-minute fair value gap. So coming into our London session now, we are looking for an entry model. We've got a current daily low down here, so we want a sweep of liquidity. I'm not going to rush into chasing this. We are displacing higher already, but I'm not going to rush in to try and get on board with this move. I want to see how price sets itself up within the trading window from 1 AM onwards. So as London starts, we do pull back. There's a nice setup here. We've got obviously a breaker block set up here. Fair value gap into a breaker block. This is basically what I'm looking for. A breaker block with a fair value gap. And we've got failed fair value gaps here. So these failed PD arrays are what's really giving me confidence to take these trades. I'm looking to see a change in the state of delivery, and to analyze that I want to see PD arrays failing and then creating inversion fair value gaps and breaker blocks. And when we see these inversion fair value gaps and breaker blocks, it's giving me real good confidence to take a trade. This isn't an entry for me because I've just literally, the hour has just started. The new 4-hour candle has just opened up. So I'm expecting it to create a bottom wick or a top wick before it decides its direction. So either we want a sweep of the previous 4-hour candle low, which is this low here, and then a pullback to create a bottom wick, or we want a sweep of the 4-hour candle high, which is going to be taking out our Asia highs. So let's just monitor price action now on the 1 minute and see what we get. So we do get a reaction from the breaker block inversion fair value gap. So this again, unicorn entry is a trade. We do have equal highs here. Would have been a good take profit one off this swing high here. This is a low hanging fruit. If you were going to take this trade, that would have been TP1. See if we can sweep these highs. So we're building liquidity underneath. So this is giving a bullish bias because we've failed to take those highs and we are now pulling back in the range. So we're coming into 130. So this is a new half-hour candle. Obviously there's no entry at this point. I would like to sync my entry with a open of a 15-minute candle. So we're coming down. So eyes are on this low now. We are coming into 145. 44. There's 45. So this is the open of a new candle. Just swept that low. There's no real entry there. We've not had a failed PD array. So I want to see some failed PD arrays. We've not broken through this order block. We have just now closed that bearish fair value gap. Let's look for what happens at 2 AM. Kind of, you can see we're just building liquidity here. We're just building relative equal lows, relative equal highs. So we've got a strong consolidation area at the moment. Open of the new hour, we can see some volume coming in at 2 AM now. Strong move through, brilliant. So we've got a close through, sweeping these relative equal lows into the bottom of the 15-minute fair value gap, leaving bearish fair value gaps. So we're wanting to see these start failing before we start considering a long position. We've got an aggressive move outside of this range, and then we would like to see an aggressive move back into the range for an entry around the start of a 15-minute candle. So we've still had bearish displacement coming outside of the range. Pulling back in, we're respecting this bearish fair value gap at the moment. Okay, so that's one failed PD array there. Time is 2:12. Two failed PD arrays. Right, we're getting displacement now. So we are looking for displacement, which we have got. So this is a good indication that we've got a buy program. All of these bearish PD arrays have just been traded through. Really strong displacement in the open of the 2:15 candle. So the open of a new 15-minute candle. And we have now finally got that volume break of structure. So we've had a failure to displace outside of this range. We are coming, take the high. So we'll take this liquidity. And then we are looking for a pullback. And then a reason to get long, anticipating the Asia high to get taken. So in this area, you can see these last three up closed candles before this swing high that created the new swing low. These are our breaker block. It's been completely disrespected. This would have been expected to be an order block and hold price lower. Price has traded straight through it, so the order block has failed. Instead of being now resistance to push price lower, this could flip to support, becoming a breaker block, expecting to hold price higher. What have we got inside that breaker block? We've obviously got this fair value gap, bearish fair value gap that's been traded through, which would be an inversion fair value gap. We've left the bullish fair value gap here. We've got bullish displacement, failed PD array in the form of a bearish fair value gap. Price continues higher. We've left a significant fair value gap here, so a big large bullish fair value gap. This is where we've left our balanced price range. Bearish fair value gap overlapped by a bullish fair value gap. Extremely inefficient price delivery. And we know that the markets do not like to leave inefficient price delivery. So they're drawn to come back and rebalance these areas. So this will be a highly sensitive area if price does come back there. So we've got a BPR inside our breaker block. The next thing we're looking for is an entry to coincide with the open of a 15-minute candle. So there was no entry at 2:15. We've essentially just blasted through. We've missed that entry. Now by the looks of it, price has continued higher. So there's no entry at this point. So we're looking now at 2:30. So 2:30 is where I'm hoping to see a pullback into this breaker block for a position long to take us higher. We're building relative equal highs here. So this is nice. So I'm thinking at this point, if we do get a pullback, I've got a low hanging fruit TP1 target. Time is 2:27. So this is the point where if we are 3 minutes either side of the open of a 15-minute candle, I would take an entry. So I would preset my long position. Off the top of the breaker block. The stop loss is going to have to go below a sensible swing low. So what have we got coming in here? We've got the breaker block low. You could place your stop loss below the breaker block. That's a bit risky for me. I would place it below the swing low of this candle that created these fair value gaps. So we've got a bullish fair value gap in here and a bullish fair value gap in here. Both of these could potentially get filled. If price comes lower than this, well, I would expect it to come and take out this low. So I think a sensible stop loss below this candle's swing low here, only a 3.5 pip stop, is a good target. TP1 is going to be the low hanging fruit, relative equal highs that we've created here, and then obviously aiming to run this Asia high into that 15-minute fair value gap. Specifically, I'm interested in 50% of the fair value gap as a final TP, which would give us a really nice 3.7R trade. So let's just see if we can get tagged in at 2:30. 2:29, 2:30. So we hit exactly the open of the new 15-minute candle. Digs in a little bit deep. It's not quite tagged the BPR there, so we'll get a pull straight out, basically zero drawdown. Tap the top of the breaker block and then are pulling away nicely. Oh, we've come, there's the BPR hit. So we've had a little bit of a pullback into the balanced price range. And then price accelerates away. So we could have been greedy with our entry and tried to get an entry just off the BPR, which, I mean, look at that for precision. That would have been an epic entry. But oftentimes price will just hit the top of a breaker block. And it did hit the top of the breaker block exactly at 230. And now we are away, looking to take our first take profit, low hanging fruit at these relative equal highs. Which price drives to really, really quickly, so that's really nice. We've tapped that. We're looking for the Asia high to get swept, which we've just taken Asia high, and the draw on liquidity would be to rebalance this fair value gap. Specifically, as I mentioned, 50%. So I'm happy if 50% gets hit. A little bit of consolidation after we've taken the Asia high. And there we go, up to the fair value gap. Just tap the 50% of the fair value gap there, bagging us a really nice 3.7R trade with essentially no drawdown. We knew that the BPR was a sensitive area and would come and get tapped. As soon as that got tapped, we were off to the races. And that is my new favorite entry. I'm looking for a change of the state of delivery by observing failed PD arrays. So this is bearish fair value gaps failing, potentially turning into inversion fair value gaps as support, which it did so at this point. As we can see, this bearish fair value gap became an inversion fair value gap, acting as support again exactly at 215. So this was tapped at 215 and away we go. For additional confirmation though, we wanted to see the order block fail, which did, converting into a breaker block, and within that breaker block we have lots of confluences building up in the form of balanced price ranges and fair value gaps. This order block as well, the inversion fair value gap just below us. Loads of reasons to expect that this is now going to flip to support. Perfect entry at 230. And then a really, really nice stress-free 3.7R trade to the high. So this is my new favorite entry model. The breaker block entry model with additional confluences inside it is just being really profitable for me these past 2 months. And it's really transformed my trading, to be fair. It made me much more consistent. And I would highly recommend following this kind of process before you take your entries. It's worked wonders for my trading and I think it would do the same for you. If you've enjoyed the video, please give it a like. If you have any questions, drop them in the comments down below. And likewise, if you're enjoying this content and want to see more videos like this, then please consider subscribing. It'd be great to have you on board. Thanks for watching. I'll see you in the next video.